What's going on, guys? Today we got a great conversation with Polina Pompliano. In this conversation, we talk about what's going on with Bitcoin, the Bitcoin Treasury companies, how Iran and Israel and all of the geopolitical conflict, how that's impacting your portfolio and the price of Bitcoin. On top of that, we also get into what's going on in the stock market, why investors now like Bitcoin, the fact that the volatility is going down, not up. And then Polina gives a little bit of behind the scenes, what happened over the weekend before we announced the deal in the public markets. Hope you guys enjoy this conversation with Polina Pompliano. All right, Polina, what's the first topic you got?
All right, let's talk geopolitics. Bitcoin's price dropped below 100,000 as the U.S., bombed some nuclear bases in Iran on Saturday.
Yep.
However, it is now, I just checked back at 105,000.
Because it doesn't matter.
So how should investors just in general view these constantly volatile geopolitical events?
Well, I think the first thing is you got to remember that geopolitical events like this are a surprise by design. So there's now reports coming out that the United States sent some B-52s to Guam. Everyone's like, oh, where are the B-52s? Let's look. They're going west. At the same time, the U.S. from Missouri sent 9 B-52s east. No one saw it coming. They got in, they dropped the bombs, and they got out. No shots fired at U.S. servicemen and women, which is incredible feat. 37 hours, if I remember correctly, flight. Now, why is that important? It surprises the enemy. It surprises the American people. It surprises the investor. So the surprise factor, immediately people, it's like the ground starts shaking in an earthquake. You're like, wait, what's going on? Let me just get my bearings. So what do? That uncertainty leads to a quick degree of fear. If you fear, what do? Sell, sell, sell. And so you see algorithms and humans both sell. Now, this happened over the weekend, though. You can't go sell your stocks. You can't sell a lot of these assets because the hours of operations of the traditional exchanges. So naturally, what you get is you get a big sell-off in things like Bitcoin, et cetera. As I predicted over the weekend is that it will come right back because ultimately it is a shock factor. So you see it go down and then it goes back up. And so what people I think have realized is, hey, everything is good. Everything's going to be fine. Now, of course, they did announce a ceasefire, which is helping the assets recover as well. And we saw stocks go down on Monday. We saw other assets go down. So it is really just people in response. They didn't have anything else they could sell. So if you want to raise dollars, if you're worried, what do? You sell in almost like a panic, emotional response to the news, and therefore you lose money. I mean, that's what happened, right? Is if you were selling at 100 and now it's at 105, that wasn't smart. And so I just think that is the general thing. And we've seen this happen before with a lot of the Middle East conflict. When Iran shot, I think it was like 300 missiles at Israel, then same thing happened. Bitcoin sold off and then it came back. And so it goes back to this idea that the people who tend to do best in the market are the people who lose their passwords. Just chill. Stop looking at the chart. If you're spending your Saturday staring at a chart, we got a whole nother conversation we got to have. Instead, understand the asset that you own. Because if you bought Bitcoin and then all of a sudden Iran, Israel, and the United States start dropping bombs on each other and you're selling your Bitcoin, you don't understand what you own. And so it comes back to this idea that you have a asset that is decentralized, that is censorship resistant, that cannot be seized, and it provides sovereignty for individuals, companies, financial institutions, and countries. The more uncertainty, the more chaos, the more that we get towards this like fourth turning, the more valuable Bitcoin is going to be. And so to me, that is ultimately what we saw is we saw an uneducated emotional response. Bitcoin sells off, comes right back. Everyone chill out. You're fine. If you went to sleep on Friday, you woke up on Monday, you don't even really know what happened, right? And that's the way that it should be. It's just keep a long time horizon. Bitcoin is not supposed to be a speculative tool. Yes, people do speculate with it, but ultimately Bitcoin is to be held for decades. And if you do that, that tends to be in a much better position.
Okay. Let's talk about how actually volatility with Bitcoin has kind of cooled and Bitcoin has become more central to people's portfolios. Co2, the investment firm, it has this list of the largest 40 tech quote unquote companies by 2030 and it ranks it by 2030 market cap. Bitcoin, Ethereum, Revolut, and AppLovin made the list, and there's no Apple or Google. What do we think?
I don't know about all the other ones. I'll talk about Bitcoin. With Bitcoin, I think that there's this concept of what is the child story? Like not too hot, not too cold is just right.
Goldilocks.
Goldilocks. So you can say that basically Bitcoin has now entered the Goldilocks of volatility. And what I mean by that is Bitcoin, when it is a 150 vol asset, institutions can't hold that. They can't see something go up thousands of percent and then drop 90%, right? It's too volatile. Bitcoin also is not that interesting to people if it only goes up 2 or 3% a year, right? So what you need is a higher degree of volatility than you could otherwise get in treasuries or stocks, but you need a low enough volatility where institutions can wrap their head around it. And Bitcoin has now entered into that area. Bitcoin, over the last 5 years, the compound annual growth rate is somewhere around 65%. That's very attractive. The best hedge fund in history, Rentec, that is what they returned. So you now have entered, right? Just think of it, as volatility has fallen or as the compound annual growth rate has fallen, you now are entering a zone where the absolute best hedge fund in history is. So that crossover is pretty important because now it is fathomable to people. They're like, oh, okay, 60%, that's high. But I at least have seen something like that before. If you show up and you're like, yeah, compound annual growth rate is 240%, the fact that it's such a high percentage, they deem it's risky and therefore they won't put it in their portfolio.
I mean, you were talking to institutions back in 2018, 2019. Do you remember their reaction? Because it was very volatile then.
Well, I think the institutions that I was fortunate enough to work with who backed those funds, one of the things they liked about the structure that we created is that we put Bitcoin inside of a venture fund. Now, why do they like that?
I see.
Because to them, they were only getting quarterly marks. So 4 times a year, they would be updated on what the whole portfolio was worth. So the private companies plus Bitcoin. If we had gone to them and said, hey, we're going to buy Bitcoin in every week, every month, every quarter, we're going to give you these updates on just Bitcoin's price. And sometimes it's going to be up hundreds of percent. Sometimes it's going to be down 50%. They're like, we can't put that in our portfolio. It's too volatile. So the way that we were able to get Bitcoin into some of the portfolios of these organizations was we basically put a wrapper around it that was able to obfuscate the actual volatility of Bitcoin.
What? Say that word again.
No, I said how you say it?
Obfuscate. I don't think I've ever heard you use
that's
that
a word. Hide it. Hide it behind the curtain.
No, I know what it means.
Yeah, okay. Well, I'm just saying.
Wow, that you just
SAT
hit me
words.
with obfuscate.
Yeah, well, I'm trying to teach my children how to read, write, listen, talk. I got to start.
Obfuscate.
I might start reading the dictionary to up my vocabulary so that I can help them.
Just very quick. One time, this was years ago. I didn't know that Anthony had much of a vocabulary, if at all. And he was no, I just meant like you use simple words, which I appreciated. So he was on the phone, I'm doing my work, and he's pacing back and forth doing his phone call. And all of a sudden I heard, it would behoove you. And
it would behoove that person.
Where did you pull that out from?
Listen,
heard you say that.
When you have the intelligence level of me, when you're in high school, one of the things that you can do is you can really not care a lot. And if every once in a while you pull a word out that people are like, don't expect you to have, now they're on their toes. They're like, wait a second, this kid, where did behoove come from? Where did these words come from? Because now they don't know. They can't put you in a box. So I got a whole little bag of tricks.
I am bewildered by this.
Okay. Well,
all right.
The whole idea is that you can put it inside of a structure and you can hide the volatility. Now what's starting to happen though is investors are saying, wait, the volatility is at a level that I actually want my portfolio. I want it to outperform my traditional assets, and I can wrap my head around it. So they understand Bitcoin better. They understand what the volatility is, and they see the trend. We have the benefit of time. The compound annual growth rate is coming down. So you know that, hey, today it's at 60 over the last 5 years. 5 years from now or 10 years from now, maybe it's at 30 or 40, maybe it's at 20, right? Whatever the number is, it's going down, but you want to be able to capitalize that because it still outperforms your regular portfolio. And so I think that is really this idea that Code 2 is talking about, where they're like, okay, now investors are starting to put Bitcoin into the portfolio because the volatility has cooled. And so, yes, individuals, the reason why they were attracted to Bitcoin and why most of the people watching or listening to this front ran all the institutions and countries is because you wanted max volatility. You actually did not want the volatility to cool. You wanted up 1,000%, down 80, up 1,000%, down 80. You're cool with that. The institutions are not. And so now the volatility has come down. That's why you see individuals, I wouldn't do it, but other individuals basically push way out on the risk curve in crypto. They're saying, okay, well, this Bitcoin thing, that doesn't move as much as fart coin or whatever other coin. I'm looking for max volatility. Let me go to, shitcoin land, right? And so again, it goes back to what is somebody trying to optimize for? The institutions are not optimizing solely for upside volatility. What they are optimizing for is kind of a well-rounded asset. They want something that has some degree of asymmetry, but also they want a thing that's not going to go down 80%. They want something that is resilient. They want something that now is starting to check all these boxes that Bitcoin brings to the table. They put it in the portfolio and Sharpe ratio goes up. They actually get some non-correlation or lower correlation between their assets in their portfolio, and they still have a high enough degree of upside in Bitcoin that it outperforms some of the other assets, and that makes it attractive.
Perfect. Let's talk about stablecoins.
Okay.
So on CNBC on Monday, you said people want to spend stablecoins because they will be less valuable in the future, but they want to save Bitcoin because it will appreciate over time. Circle's stock has raised 600% since its IPO. And the U.S. Senate passed crypto legislation called the Genius Act last week, giving crypto industry the first major legislative win. Trump urged the House to pass it. He says, this is American brilliance at its best, and we're going to show the world how to win with digital assets like never before. Just really quick before we get into it, can I just shout out our producer, Matt Merlinski, for these topics? He does great research. I'm just out here like a talking head.
Matt, how much do you pay for that? this is something.
This is just such good research. All right.
Polina is getting paid in bagels or something. All right. So stablecoins are hilarious to me. The great paradox of stablecoins is they're incredibly important and they don't matter at all. Today's episode is brought to you by Gemini. Are you interested in effortlessly growing your Bitcoin portfolio? I sure am. So good news, Gemini designed a product just for this. Meet the Bitcoin credit card powered by Gemini, which offers instant Bitcoin rewards on every purchase. This MasterCard World Elite product has no annual fee and no exchange fees to acquire your Bitcoin rewards. It's that simple. The magic of the card doesn't stop at the rewards. The card is sleek metal design that comes in rose gold, silver, black, and the new limited edition Bitcoin orange. Sign up today to earn a $200 Bitcoin bonus to jumpstart your Bitcoin portfolio whenever you spend $3,000 in the first 90 days. Obviously, terms apply. Go to Gemini.com/card for more details. That's Gemini.com/card. Go check them out today. Today's episode is brought to you by my partner Bitwise, the global crypto asset manager. Bitwise has $10 billion in client assets, a team of 100 plus people, and more than 30 crypto products to help investors get whatever access they want. They manage the world's largest crypto index fund and a wide range of crypto ETFs. They also manage private alpha strategies, have SMAs for large investors, and are one of the largest institutional Ethereum staking providers. And oh yeah, they've been in the game since 2017. These guys know the space inside and out. So check out Bitwise. Go to bitwiseinvestments.com and see all they've got to offer. That's bitwiseinvestments.com. There are a million ways to access crypto. Explore how you can access it best with Bitwise. And always, of course, carefully consider the extreme risks associated with crypto. They're incredibly important and they don't matter at all. Same thing at the same time, right? Why do I say that? They're incredibly important because they are the way that many of these traditional financial institutions, politicians, emerging markets, they're all getting on board to this new digital world. They don't matter at the same time because they're just dollars. Dollars have existed for years, right? It's not some new crazy thing. And so
is it just like a digital dollar? I'm trying to understand.
The best way to think about it. If I ask you, give me $1 of physical cash, yes, you're going to hand it to me. If I say to you, send me $1 on Venmo or from your bank, you still send me $1, whether you handed it to me physically or what I would call an electronic dollar.
Yeah, but I probably pay some in fees, so it's not
possibly, but it's still $1. It's just in a different form factor.
Okay.
A stable coin is now just another form factor, which is a digital token on a blockchain that represents that same dollar. So whether it's physical, electronic, or digital, it's still $1.
And what, it's backed by my like digital dollar, my physical?
The dollar that is on the blockchain is backed by US Treasuries.
Okay.
So they sit there, you can get them back, right? It's got the value behind it. And so the whole idea, again, is they're important because they're onboarding people to the digital world. It now is an ability for you to move without hours of operations, low cost, anywhere in the world, immediate, etc. So basically the dollar gets more utility, but it doesn't matter because it's just the dollar. So you're opening access, you're improving the usage of the dollar, but ultimately the actual asset itself is just $1.
Wait, and just really quick, why is it different from just sending a digital dollar? If I want to send money to Bulgaria right now, I can do it via like PayPal. Why is that different?
Maybe.
Maybe.
It depends on what the country is. It depends on when you send it. It depends on what the fees are. I mean, there's a lot of stuff in there, right? So, for example, let's say that on the weekend, I may or may not have recently been involved in a transaction where people had to send wires. Well, the wires don't actually get sent till the weekdays.
Oh, okay.
And so
faster.
there's hours of operations, right? Everyone has had the experience in business that they got to get to the bank or get online and send the wire before 2 p.m., right? You know, there's all these things that happen that, again, are somewhat antiquated. If you move all of the money into a digital token that now can just move freely at any time for no cost to anyone, now what you're doing is you're opening access. You're reducing friction. There should be more velocity of money in the system. That's ultimately good for economies and for individuals.
Do the banks like this?
Well, the banks don't like it if they can't participate.
Are they participating?
So when Tether and Circle are out there having a field day,
right,
and the banks are sitting on the sidelines because they can't touch crypto,
right,
the banks are advocating. They're saying we should create rules. This is nonsense, yada, yada, whatever. But recently, two things happened. One, the banks who have been very clear to say if we get the green light, we definitely jump in the stablecoin game. JP Morgan came out. They announced, I think it was called the JPMD, I think is what they called it, which is like their version of a stablecoin. A little bit, some changes they made, but it's their version. Bank of America, Brian Moynihan, he said that they're going to get in the game if they get the approval. And then the bank regulators just came out and they said that they are now going to reduce or remove this idea of reputational risk to a bank if they participate or touch things that are in crypto. So what used to happen is if a bank, Signature, Silvergate, etc., if they were doing anything that had crypto relationship, they would actually get dinged by the regulator and they would say, oh, that's a reputational risk. There's issues there. Now the regulators are saying we're not going to assign that to you if you participate in this industry, which is kind of a big moment because now it again is one step closer to the banks participating. And so the banks are also rumored to be talking about, should they come together? Should we get a little oligopoly? You didn't think I knew that word, right?
I did not think.
But on top of that, maybe they'll create a little consortium. You didn't know I knew I had that word, right?
God.
And so as they create a partnership on Wall Street, maybe what they will do is they will create a stable coin that all the banks will use. And their idea is that they have a network effect. They've got a walled garden. They'll go to their customers and they'll say, use our products. Now, to all the subscribers of the Pomp letter since like 2018, look it up real quick. Pomp letter. And then type corporate central bank, I think is the letter. That's big brain right there to remember what I wrote 7 years ago. What is it? What year?
No, 4 months ago. Hold on a second.
So my whole thing was JP Morgan tried this one time before. They type in a JPM coin. They launched something called JPM coin, which was a test. And what they said is we are going to have our corporate clients use JPM coin to move money within the bank. What year?
Is this 5 years ago?
Something like that.
Wells Fargo is creating a
JP Morgan, JPM coin.
I
and so when they did that, the whole idea that I said was you have to be careful that they do not launch these things with a dollar backing. And then in the future, they remove the dollar backing and now they can just print coins at will. They basically become a central bank themselves. And that's what the U.S. did. The U.S. basically removed the gold backing, and they just can now print as many dollars as they want. Every bank on Wall Street would love to be able to do that if they could. So what I think is going to happen here is you're going to have to create a rule that says if you launch a stable coin and you have a backing, let's say 1-to-1 to the US dollar, you may never remove the backing in the future. You can't onboard a bunch of people with the promise that the coin is backed by something and then in the future remove that backing, change the rules, and now all of a sudden you just have a money printer.
Is it the corporate central bank playbook?
Like I said, what year?
2019.
Ooh, I was off by 1 year, 6 years ago.
But I'm not.
So I've been talking about this for half a decade.
I just realized I'm not a paying member of the Pomp letter, so I can't actually read it. But I do see the corporate central bank playbook. I'm sure I am on another account.
You guys want to understand the dynamic between Polina and I? She claims to not be a
I should be
subscriber.
complimentary.
Who was the first subscriber of the profile?
Actually, somebody else. You were second. Somebody beat you to it. Remember, you were upset.
I'm still paying.
But
years later.
Why did you not add me as complimentary? It's the least
handouts.
you could do.
People just want handouts in this world, man.
Okay.
Like $100.
Yeah.
It's like you don't even respect the time, energy, effort I put into creating
my money. $100.
Big ideas I've been putting in there for a decade. You know how much money people would have made over the last 10 years or whatever I've been writing that thing?
Who came up with the idea for that thing?
What's the next topic?
All right. So let's talk about this deal that happened over the weekend. You launched a Bitcoin Treasury company, but more so than that, let's just talk about like this trend of Bitcoin Treasury companies. By the way, fun fact, today I woke up to a message from my family in Bulgaria to an article in Bulgarian about Anthony launching a Bitcoin Treasury company. I was like, this thing made its way to Bulgaria?
It's global. Bitcoin is global. Everyone wants Bitcoin.
True.
Do you not see? Everyone wants it. Doesn't matter what language you speak, what religion you're part of, what your education, your wealth status, where your geography, does not matter. Everyone wants Bitcoin.
So just explain to me, like, what is a Bitcoin Treasury company?
Are you looking for a simple way to earn Bitcoin rewards every single day? At Simple Mining, we help people mine Bitcoin, even if you're brand new. We're a vertically integrated Bitcoin mining company based in Cedar Falls, Iowa, offering a premium white glove hosting service that helps you maximize your mining profitability. With over 500 clients worldwide, we manage over 15,000 machines across our sites. Our facilities are staffed 7 days a week, and we fix most on-site issues in under 48 hours. In fact, we can repair more than 2,000 hash boards each month in our dedicated repair center, ensuring your miners run smoothly. Want to see it firsthand? Tour our mining sites, either in person or online, anytime. Plus, for your first year of mining, we cover all repairs, no questions asked. We bill you for the exact time your miners are running, and you can pause whenever you want. Need to buy or sell? Our exclusive miner marketplace gives you the freedom to trade on your schedule. You'll even have a custom dashboard to track your miner stats in real time, and if you're thinking about running your operation like a business, our tax team can guide you through the depreciation advantages. Ready to grow your Bitcoin stack? Visit simplemining.io.
The entire idea is when you capitalize a business,
Yes.
and let's say in the dollar denominated world, you put dollars onto the balance sheet. Okay. When you put dollars on the balance sheet, then you got to go figure out, what are you going to do?
Yeah.
Some businesses say, I'm going to go and I'm going to build a piece of hardware. Some say I'm going to build some software. Some people say that I'm going to go and do lending, or maybe I'll do asset management, or whatever the thing is, right? But you seed the business with some dollars, and then you have a business that you get into. What the Bitcoin Treasury companies essentially have said is, whether they already are a company or they're starting a new company, I'm going to put Bitcoin on the balance sheet. And then my entire goal is to buy more Bitcoin. Now, what people generally think of as a true Bitcoin Treasury company, or a pure play Bitcoin Treasury company, is they essentially are using capital market tools to raise more capital to then go buy more Bitcoin. So for example, if let's say that you put $100 of Bitcoin on the balance sheet of a company, and Bitcoin's price goes up, let's say 50%, now you have $150 worth of Bitcoin. Your share price should be increasing. If your share price is increasing, there's all kinds of capital market tools available to you. What is happening right now with many of these Bitcoin Treasury companies is they're trading at a premium to NAV. And there's a lot of debate as to why. Some trade, out NAV. Some people trade in some cases as high as 6, 7, 8, 9 times NAV, right? Obviously, I don't think that's very sustainable. And so there is some sweet spot where what people are essentially, in my opinion, doing is they are trying to quantify or measure what is the value of the future Bitcoin purchases that are going to occur here. And the way that many people have started to think about this, which again, I'm not saying whether I agree with this metric or not, is something called Bitcoin per share. So if there's 100 shares and there's 100 Bitcoin on the balance sheet, 1 share equals 1 Bitcoin. So you have a Bitcoin per share of 1. If all of a sudden now you have 110 Bitcoin on the balance sheet and you still only have 100 shares, now you have a Bitcoin per share of 1.1. That's a 10% increase. And therefore, if you keep getting that Bitcoin per share to grow, then people start to say, oh, you know what? If I hold this thing and the Bitcoin per share is going to grow in the future, then I should actually ascribe some future value, and therefore it's going to trade at more than NAV. Well, if the stock trades at more than NAV, then people have even more capital market tools available to them. And so I don't think that the current version of what's happening in the market is going to be the version that happens forever. I do think that there is a lot of value, whether you are an individual, a company, financial institution, or a country, in buying Bitcoin and holding it. And I think that now what we are seeing is we are seeing the intersection of Bitcoin and traditional markets. And as those two things come together, there will be new ways that people can start to do things that they otherwise weren't doing a decade ago. How that plays out, we'll see. Obviously, given the deal that we announced, there's not a lot that I can say in terms of our specific strategy. People can go look at the public documentation. People can look at the press releases. But I do think that there is something very interesting happening in this space. I can analyze what's already occurring. I've got ideas as to how this will play out. And rather than be like a Monday morning quarterback sitting here critiquing everybody else, in the words of Chamath Palihapitiya, like, let's jump in the arena.
Well, I can talk about the deal because I was there.
No, don't talk about details.
No. I can talk about behind the scenes of the deal because I was there. But anyway, so basically, I just want to say that you may imagine Anthony, doing a deal behind the desk, calling people. No, that's not what happened. What happened was I said, like a great wife months ago, let's go on this nice trip in the woods in a mountain upstate New York.
To celebrate our wedding.
Which is in a month. But still,
So,
I was like, okay.
You see how this works?
So-
Like we're not even in the same month of the wedding. But
So not only was it a nice trip, it was an anniversary trip. Well, it also happened to coincide of it being the weekend before this deal closed. So I'd be like, hey, let's go on a nice walk in the woods. And then Anthony's on a call with someone trying to figure something out. We're walking in the woods. Bam, he loses service. Gotta go back. Then bam, there's a porcupine walking in front of us. Anthony,
you ever been on a call with 25, 30 people and you lose service in the woods and you have, listen, gentlemen, this is a very precarious, I think I know that word, precarious situation. On one hand, you're very frustrated. The phone call you start to get the disruption in the phone call. You're just like, damn, can't I just sit inside? I can do the phone call. It's important. On the other hand, you got your beautiful, caring, amazing wife.
Can you find a better word than
trying to
beautiful,
walk
caring?
in the woods? And so you know what you do? You say, sweetie.
You've never used that word ever in your life. When have you ever called me
Honey.
sweetie? When have you ever called
Whatever word y'all use. Why don't we walk over here? And you do the old like
No, I got a yo.
arm around, and then you guide her back towards cell service.
I got a
And then as you
yo.
guide her back towards cell service, you make comment on the fauna. She doesn't think I know that word. On the tree top. Maybe on the animals, the reptiles, anything going on around you. Call out maybe that there might be dog poop on the ground, be like the white knight, the chivalry.
It was actually horse, but okay.
Make sure that she doesn't step in that. Just be a good guy. But you guide her back towards the cell service so that you can continue your call. On top of that, if you ever are working on something, I would just tell people, I was up on Monday night until like 1:30, 2 o'clock in the morning. Then I had to be back up again at like 5. So I was, doing what I had to do. And if you ever get a text message from your wife while you're up on calls with a lot of people, and she says, hey, are you going to come to sleep soon? Another thing you can do, just use the thumbs up.
What?
The thumbs up is the man's greatest friend in a text message with their wives. You know why?
No, I would not endorse
Because
this.
it's just enough. It's just enough where you acknowledge it, but it doesn't give any information. And it just upsets her enough where she's probably thinking like, am I going to go off on this guy right now? But it's not so abrasive that she actually can attack you because it can be interpreted with a lot of different ways.
This is
And so if you use the
bad
thumbs
advice.
up,
This is such bad advice.
it's like, I acknowledge you. I was being kind. I was thinking, I could have not responded. I was on a call. But also, she knows that you're basically not answering. It's a polite non-answer. It's thumbs up. And so that's what I did.
Narrator.
That's
He
what I
did
did.
not go to sleep at 1:30 in the morning.
I gave her the thumbs up and then didn't go to sleep. So yes, the behind the scenes of a lot of this stuff is a little crazy.
Shocking we survived this weekend.
it can
but we
be,
survived. We are here today.
Yeah, I told Polina this week, she a real one. 100%. She knows the life that she signed up for, and we've been through all kinds of great stuff
my
together in terms of different deals and different things. And as you could tell, she's still asking me what a Bitcoin Treasury company is. So
I'm just saying.
I don't know how much paying attention she was doing all week.
I was out sunbathing while you were inside.
Okay.
Like a gremlin.
Yeah, she did say to me at one point, if you don't see the sun outside, it doesn't count that you went.
I literally pulled up some research. I was like, 20 minutes in the sun, in sunlight, boosts your vitamin D. He was like, Anyway.
You know what, boys? We got it done, though. All right. What else you got? Anything else?
That's all I
That's
got.
it. All right. Thank you guys very much for watching. We'll talk to you guys next week.